top three things in my notebook this morning: the Japanese yen, number one; number two, the German stock market, which would be the DAX; and number three, the price of gold. Looking at number one on the yen, this is an interesting situation, and I'd say that by and large we're going to get a bunch of overbought and oversold signals across global macro today, which would include an oversold signal in the Japanese yen, which you can see trading right around 101.66 versus the dollar. That I can maybe get it like maybe to 102, but it's pretty tough to get it beyond like 3.8 standard deviations oversold. And the corollary to that, of course, is the Japanese stock market, which is just howling to the upside on that, as it has throughout the year. So again, down yen, down 14, 15% for the yen year to date, equals Japanese stock market up 1.5% last night and up 53% for the year to date. Looking at the German stock market, again, a higher high for the German stock market. We remain Euro bulls despite what the Europeans have basically attempted to do, which is devalue the currency, and that, of course, didn't work. If you look at last week overall, the euro was actually up 0.5% on the week, and that, of course, is because the U.S. is now the marginal debaucherer of the currency in terms of its scale. So, again, the Europeans can't fight that without another rate cut, which they're probably not going to do this week. So, again, European equity bull case remains intact. German stock market up another 0.9% to an overbought signal, so if you're long it, you can sell some. Gold, finally, is just getting blasted. That's a big oversold signal. And, again, you're getting part of that because people are completely capitulating. Part of that is because people have been trying to buy it, in and around what you would expect, which is maybe the dollar going down equals gold up, which has, of course, not occurred because interest rates are going up. And interest rates are much more impactful on gold than the dollar currently, so just look at that for what it is. And what we did today in the chart of the day goes back to all the way back to the 1990s, can show you quite coherently how gold acts in terms of both price and expectations in the face of interest rates rising and falling. So those are your top three things.